Good morning, everybody. It is Tuesday, March 9th, 2021. This is Retirement Income Options Show. Going to cover some cash secured puts and some covered calls for you, take some questions and answers, and take a look at our monitoring list. Give people a little lesson about that. As of this week, there really wasn't much change to the options that I was recommending from last week. I added a couple of companies and I removed one, so we'll cover that. Stock market came back in the last week, so you should have been able to sell a couple of puts. Market is rebounding a little bit today. I told you yesterday we'd probably get a little bit of a relief rally, and here right on time we're getting it. That doesn't change the fact that interest rates are still heading up. We have 3 big auctions in the next 3 days. Should add some clarity about where the 10-year treasury is heading. I'm guessing that it goes up 5-10 basis points, and that will put another hush on the stock market. But we shouldn't discount the idea that all this money, all this stimulus, which is coming again in just several weeks, is going to have a positive impact on the stock market. And we pretty much could see a double top, might even see a new top, might see 4,000 on the S&P 500 for a hot minute. And if we do, that'll be an opportunity to sell a lot of covered calls. So each week I put this file in. It's from TradingView, and this is just an oscillator view. This is the one that I'll send out every week. I've been experimenting with different ones. And this is all of the very short list stocks, some that I used to cover, some that I'm watching, and there's probably several missing. So if you want something in here, let me know and I will add it to my list. But pretty simply, here you go. They have something they call the Awesome Oscillator, and it's kind of a combination of other things. You have your stochastics, relative strength index, which is the one that I probably look at the most just because it's a nice shortcut. And that's what I have it ranked by right now. And you'll see there are some stocks up here that, this relative strength index is off the charts, right, in the 90s. So there are certain stocks that if you own some of these, you probably want to trim them, as well as sell some covered calls. None of these are really in my universe. Lumen is the one that, pops up a little bit. But as we covered yesterday, you don't want to get rid of this stock because it's probably going to double in the next year or two, depending on whenever they split off that one unit. They pay out big fat dividend. You don't want to risk losing that. So this is more of a stock that I would sell cash secured puts on if you get a dip. I wouldn't be selling the covered calls because I don't want to lose this stock. And that's always the discussion you have to have with yourself is, okay, do I want to lose it? And if it pays a big fat dividend, usually you don't. So you go right on down. If we rank it by E, the Awesome Oscillator, you can take a look at some of the things that are going on with this and how it corresponds to the RSI. So you get some buys down here. And again, you want to have different oscillators lining up. You have to also factor in with your fundamental outlook. I wouldn't consider these really to all be automatic buys just because their technical analysis says so. But I would take a look at these. We know that Northrop Grumman is probably undervalued. RSI isn't always all the way oversold, though. My guess is that Lockheed Martin is probably in here. No, Lockheed Martin is still a neutral, apparently. But these are stocks that if you can sell a cash secured put on these and their RSI is low enough, you might consider it. So who's this? Visa. Okay, so let's pull up a Visa chart. There you go. What can we learn from this? Let's change it to 5 years, makes it a weekly. What you suddenly see is that it's in a choppy range. So we haven't charted this in a while. So let's update this one. Let me hit that one on a nut. Wow. So this chart hadn't been done in over a year, I don't think. And this is where we had the buy zones. That's right where it got to on the crash, on the coronavirus crash. So that's pretty good. All right, so this retracement would be a 0.5. I think that's probably where I'd be willing to buy it at. Got a lot of confluence in here, multiple lines. So pretty narrow range in the 170s probably on Visa. Pull that up a little bit. Now, if it would break below this, then that's a warning to you that there's something going on with the company fundamentally. That's not just some sort of a technical correction. And we saw it get down here in September, closed in. I do think a lot of people will be swiping those credit cards though come summertime. So you get a pullback. I think it's even reasonable to put the top of this all the way up here. So we're looking at there, 170s. I think 170s would probably be a gift. We can even get rid of this, I think, or take it to its ultimate top. If you want to go from the long-term trough to the long-term top, which is usually a very good exercise, you know, it filters out the stuff in the middle and just shows you end-to-end, trough to peak. I mean, this area down in here makes a lot of sense. Why? Because you have the 0.5 and the 0.618, which are on the current retracement, and that actually can be raised a bit now that the stock is higher. You know, there's this idea that you have to go exactly from the current peak to the current trough. You know, you can filter out noise. You just say, okay, call this noise and go from the low to the high. It's not against the rules. You just have to move your top marker up from time to time. 0.5. Yeah, I'd have a hard time believing this gets under 170. You want to keep an eye on the end of 2018. It's a good good mile marker. So what would you do with Visa right here? It's at the top of a Bollinger Band. That's what that cloud-like is. I took the lines off because there's too many lines. So at the top of the Bollinger Band is probably going to come down. If you were in love with Visa, you know, you could probably start buying it. Probably the highest you could buy it would be about 207. I wouldn't buy it above 200. I'd buy it down here, this 618 level. Give yourself some margin of safety. All right, I'm going to keep that chart update for us. Okay, so when we take a look at this, we go to, where my oscillators go? There they are. Go back to the oscillators. Again, we're on the weekly charts here. On track, which we sold the put on last week. I guess Regeneron would be something to take a look at. Merck we talked about last week. Teledoc is interesting to me. I think Teledoc is real close. I had that chart up. So you take a look at this and you're like, huh, came way down, big jump today. But I think that that is going to bounce off, come back down. We can get Teledoc in this area. You know, and yesterday went to been a bad trade. But if we're looking for more long term, you know, I get cheaper. It did hit right at the top of our box pretty much. So this is a $190 stock, hard to sell puts on, but keep an eye on it. It's a good company, and I think that telemedicine probably is going to grow, 5 to 10 fold over the next decade. You have to keep in mind all the potential for this to grow overseas, especially in emerging markets. How many people around the world like to talk to an American doctor? Right? Qualcomm I added back in, so it's not quite to where you want it to be yet. But you get it down here, closing in on 100, which it's almost doing, and it's a volatile stock. You know, we see Qualcomm go all over the place. Gets back down in here. I think with the future of 5G and these guys having a pretty big future in that, having that nice patent portfolio, good dividend, you start getting this down around 100. And you don't want to buy it too high because they don't have a great moat around their business. Everybody's trying to challenge them, Apple included, but they're entrenched. So when you can get their cash flow at a cheap enough price, then it's usually worth doing. So that is one of the only things that we did here. Took Invitae off because I've been looking at their patent portfolio and I'm not sure that I'm a big fan of it. Plus, if ARK has to sell something off here in the next couple of weeks, I think Invitae will be on that list. I added Itron back on, which, you know, I've been following for years now, and they are doing a secondary offering, which means obviously they're taking advantage of this high price, and I think we're going to be able to get it on the cheap. So if we can get it back down here around 88, that's probably pretty good. I added an option trade that you can do in it if you can get the price. So if you can get a $90 for $8, it means you're getting a net price of 82, which is kind of in the middle of the orange box. I'd be pretty happy with that. Now you can adjust that price up or down depending on, you know, momentum and how badly you want the stock. But I will tell you, I think that this company as the world becomes a smarter place and a more sustainable place, these guys have some pretty big upside. I really do see this stock getting towards $200 a share at some point. So, we're already probably at a price where if you're a long-term investor and you can wait 3, 4, 5 years, probably get a double out of this. I'm a little greedier than that. If I can get it down here, it ends up being closer to a triple, which is really what I'm looking for is the three baggers. All right, any questions about stocks that you own or you are looking very carefully at? There's really no other changes on here other than Itron, Qualcomm, and Invite. Nobody? Going once? Going twice? I don't know what Pins is. Oh, Pinterest? Is Pins Pinterest? Yeah. I don't know enough about their revenue to have any idea what this stock should be doing. I don't know if fair value is down here, which is what the longer term chart suggests, or if there's a whole new paradigm here. Right? Remember I talked about Pinterest a while back. I was like, I don't understand it. I don't understand how they make money. I don't understand why people go to it. I just don't get it. But I know it's super popular. It just has not registered with me. My guess is that fair value is in the 30s somewhere. Support, resistance became support. So in the middle of the range with downward momentum. So 50-ish to 40-ish looks like where a buy zone would be. I think you could probably sell a covered call up here. If you can get something for the $85 covered call, that might be worthwhile. It's down to 66 though, so I don't think you're gonna get anything. Yeah, in the long run, revenues matter, right? The short run, it's all about liquidity in the market. There's gonna be a great shorting opportunity eventually. Who knows when? Probably be when the millennials are interested in shorting. That'd be my guess. So I talked about that in an article back in the fall, what happens if millennials decide, hey, we're going to play both directions? What if they decide to be the shorts? I don't put it above them to do that. I don't think their ethics are that carved in stone. Like I said, I watch them change rules based on how they feel that day, and they rationalize why it's okay. But that's not atypical of any generation. Exciting announcements. So on Friday's webinar, I will have a guest after the first hour. So we'll do an extended webinar, and Matt Tuttle with one of the SPAC ETFs will be on. I've known him quite a while, and we're going to talk about the new issue ETF, SPAC new issue ETF, and his trading philosophy and what he sees with it. So that'll be on at 11. So we'll do a quick recording, probably for 40 minutes, take a break so I can get everything set up. And then we'll do an interview with Matt Tuttle and have a second webinar that day, which will also get released as a podcast. It'll be the inaugural podcast. I'll see you on Friday. And I have a couple more articles that'll probably get squeezed out, although today I'm pretty busy. I'm going to see my 92-year-old grandmother. First time we're allowed in the building in a long, long time. So we're bringing her some cheeseburgers and ice cream. All right, everybody, take care.